Today we're talking about crypto. Today we're talking about 401ks. Today we're talking about getting wealthy. Hey there, my name is Ken French. I'm with vastsolutionsgroup.com. We're going to be talking specifically about ways to invest in crypto using 401k plans, and a lot of people don't realize that you could do this on a tax-free basis. You could get tax deductions and potentially even in a tax-free basis. We're going to go into some of those specifics. With vastsolutionsgroup.com. I've been there for quite a while, since 2006, loving it, and we have a lot of good solutions for entrepreneurs. We do tax finance and artificial intelligence, but we're not here to talk about that. We're here to talk about enriching you, the entrepreneur. A crypto 401k, it may be exactly what you're looking for. Have you procrastinated about setting up a tax advantage retirement plan for your small business? Probably so, right? The answer is probably, you're not alone. Many self-employed small business owners are rushing to do the same, especially as we're coming up to the end of the year, with the fact that 401k assets can now be invested in cryptocurrencies. They're hot. That's a hot topic right now because, IRAs, you can only put in a little amount. You want to probably get a bigger deduction than that. One way of doing that is a 401k. Could put away a lot more, sometimes as much as $19,500, depending on your age, etc. But anyway, for owners of profitable one-person business operations, a new thing is solo 401k. They provide the potential for retirement growth and tax mitigation. Two nice things, right? The main 401k advantage is potentially much larger annual deductions, as I mentioned. And if you have no employees, solo 401k that is, then all the money goes straight to your account. You don't have to pass tests. It's a little bit easier. So let's talk about solo 401k account contributions. So really, they're called deferrals. But with a solo 401k, annual deductible contributions to the business owner's account can be composed of two different parts. The first part we're going to talk about are elective deferral contributions. For 2021, you can contribute to your solo 401k about $19,500. Your corporate salary, if you're employed by your own C or S corp, and also your net self-employment income, if you operate as a sole proprietor or as a single member LLC that's treated as a sole prop for tax purposes. Now, your contribution limit is $26,000 if you're 50 and older as of December 31st, 2021. The $26,000 figure includes the extra $6,500 contribution allowed for older 401k plan participants, again, 50 or older. That's the reason I said, you could end up putting in a little bit more than $19,500 that I mentioned earlier. Now, this first part is called the deferral contribution. It's made by you and covered and taken care of by you. Now, with a corporate solo 401k, your elective deferral contribution is funded with your salary reduction amounts withheld, from your company paychecks and contributed to your investment account. With the solo 401k set up for a sole prop or a single member LLC, you simply pay the elective deferral amount to your account. So it's pretty simple that way, right? Now let's talk about the second component, and that's the employer contribution. Now, on top of your elective deferral contribution that I mentioned earlier, the solo 401k arrangement permits an additional contribution of up to 25% of your corporate salary or 20% of your net income, self-employment income, I should say. This additional paying is called the employer contribution. So it's the company putting away money for the employer in this case, for the employee, that being you. So you're both the employer and the employee. Now, for purposes of calculating the employer contribution, your compensation or self-employment income, which is net, is not reduced by your elective deferral contribution. Now, with a corporate plan, your corporation makes the employer contribution on your behalf. With a plan set up for a sole prop or a single member LLC, a lot of you may be in that camp, you're effectively treated as your own employer. Therefore, you make the employer contribution on your own behalf. Now, combined contribution limits, therefore, for 2021, the combined elective deferral and employer contributions cannot exceed $57,000 or $63,500 if you're 50 or older as of December 31st. Or 100% of your corporate salary or net self-employment income. Now, for purposes of the second limitation, let's talk about that. Net self-employment income equals the net profit shown on what's called your Schedule C. It's an IRS form. Your Schedule E, again, IRS form, or Schedule F, as in Frank, for the business in question minus the deduction, that being a 50% of the self-employment tax attributable to that business. So I think in general, I think you get kind of the flavor that, yes, there are ways that you can put away money. There's some particulars, and how can you figure out the particulars? Well, one way is give us a call at 888-808-8278, extension let's go 700, and then you can ask all the or not all the questions, but a lot of questions, because it gets murky. There are a lot of tests, etc. But I think here you can see you as an employee can defer money, and you as an employer can put in money for your employees, and that being you in this case. Now, as I mentioned, brand new is the fact that assets now can be invested in cryptocurrency. By the way, you can also put in IRAs and Roth IRAs into cryptocurrencies. And some of the cryptocurrencies I'll throw out, Bitcoin, Ethereum, Litecoin, etc. It's Dogecoin, a whole number, as a matter of fact. Now, in fact, cryptocurrency. Now, also, I'm going to also remind you, you can also, in some cases, put in money into a defined benefit plan. Now, I'm going to remind you, I'm very proud to say that my firm, VastSolutionsGroup.com, was the first in the industry to allow such investments into 401ks, profit-sharing plans. And our service that we have, it's called Crypto K Plan. You can go to cryptokplan.com for specifics. And what I would say is, if you're interested, there's some very small things to think about, which could turn into big things depending on the circumstances. But at least it's something to think about, because in the right circumstances, a solo 401k really can make a great retirement plan for someone who's trying to put away a lot of money and also looking for deductions. Now, as I mentioned, they're complex. Consult with your professional. Call us. Go to VastSolutionsGroup.com. We have some resources up on our website, or you can go to rkennerfrench.com. I also have some personal resources there. Or again, go to cryptokplan.com. Once again, Kenner French signing off. Thanks for taking the time. Hopefully this was of value. You've learned just a little bit about investing in 401k plans, crypto K plans, etc. Thanks, and I hope you have a great day.